Another 100% day. Lots of people ended up making a lot of money. The proof is in the pudding, honestly. So if you guys are interested in getting access to my trades, the link is in the channel description or in the comments. Proof's in the pudding. Numbers don't lie. I don't lie. And it's all here for everyone to see live daily. All right. So I hope to see you guys in the Discord. Now, with that being said, we had a bit of an about face today, didn't we? The market ended up dropping really hard towards the end of the day. And once again, this had to, a lot of it had to do with the AI stocks taking a hit. So, for example, Nvidia, we bounced, right? I was saying there would be a little bit more room to the upside, and then that would be a determining factor of when yesterday I was saying how there was more room to the 38.2% fib on Nvidia. Once we got here in this area, I said this would be a time where bulls and bears would need to make a decision. Were they going to be very, continue to be very bullish, or is this a place where they were going to take profit and sell? And it looks like they ended up selling. So Nvidia took a hit. AMD obviously took a hit. The chips took a hit. Google obviously also didn't do too well. Microsoft about faced. Apple about faced. Amazon did not do well. It's still holding above 143.60 though. So this is pretty interesting. And Amazon doing well like this has a lot to do with the IWM also doing well. And you can see that the IWM was the smallest loser. So the IWM was only down 0.18%, as opposed to the NASDAQ being down 0.58% and the SPY being down 0.4%. So Amazon held up above support. Otherwise, I would assume Amazon, if the IWM was red as well, I would feel that Amazon would definitely take a hit also. But, it didn't. So take a look at Tesla. Tesla's sort of in the same boat as the IWM and Amazon. Netflix. Love to see Netflix doing poorly. But this, extreme strength in Netflix can lead to a bit of a bounce closer to 437, 435 area, in my opinion. And then last but not least, go ahead and take a look at Meta. Meta also had a bit of an about face, closed pretty flat. So in general, what we're looking at are the large tech stocks basically having a bit of a pullback off of the highs that were made last week. So we had a big gap up that did not hold, right? And, we gapped down a bit lower. So now, once again, this trend line is going to be in play, especially if we continue falling lower. So tomorrow, the level for the trend line is going to be 380.50 on the dot, actually. And then Friday, the trend line level is going to be 381.30. So we're going to have to see if those two support levels can hold on the NASDAQ for these next 2 days. But the most important thing right now are the yields, because let me just go ahead and show you guys. So the yields, as we know, the yields have an inverse relationship to the market. If the yields are rising, then that is bearish for the market. So right now, the yields are at a very extreme low here, getting close to this level of support. And we are in a falling wedge pattern. So falling wedges are extremely bullish patterns. And with the yields now getting very close to the lower end of this falling wedge, it increases the likelihood of a bounce. And if we get a bounce on the yields, then that is going to be bearish for the overall market. So that's that for the yields for now, right? When we're looking at the TLT, the TLT is the 20-year bonds. They are starting to get very overextended to the upside. So the yield, the bonds are getting overextended to the upside. The yields are getting overextended to the downside. So the yields are leading to a bit of a bounce soon, in my opinion. And the TLT should get a bit of a pullback soon, in my opinion. And when we're looking at the 30-year bonds, similar situation to TLT, and you can see that it is, getting pretty overextended. So a bit of a pullback is warranted. Now, what's interesting though is when you look at the dollar, because the dollar is continuing to show a lot of strength, but the SPY is not showing that much weakness. We saw the dollar has been breaking out of this falling wedge for days now, but the SPY, right, the overall market has not consistently been correlated perfectly. So now that the dollar is really starting to show some strength here, we need to start seeing the yields bounce a bit, because the dollar has done its work. Dollar has done a lot of the legwork here. What we really need to see is the yields start to bounce. And if the yields can bounce, then regardless of really what happens to the dollar, the market should end up falling. So all eyes on that, to be honest. And that's another reason why having our long-term puts is much better, especially than holding it short-term. Because, so yeah, that's that for everything. We could also take a look at the VIX real quick. The VIX is still trading below 13. Anything below 13 or 1350 on the VIX is bullish. All right. We need to see the VIX break above 13 or 13. Very, very simply, that's it. The VIX has an inverse relationship to the market. If the VIX is doing well, the market is going to be falling. So if the VIX can hold above 13 and 1350 in the short term, then the market is going to bounce. All eyes on the yields. And, that's going to be great because the dollar is already showing strength. The yields now just need to catch up. And once the yields catch up, in my opinion, the VIX is going to start spiking and the market should end up falling. Okay. So now, what is most interesting when looking at the SPY is that we have now closed below the major trend line on the SPY. And then when you look at it on the SPX, we've also closed below the trend line on the SPX. So we held above it 4 days. Generally, that's a really, really bullish sign. Anything above 2 or 3 days leads to a bit of a bounce. And we had that bounce. We gapped up in the open. But now we closed below. So now the question is, how much further are we going to fall lower? Where are we going to find support, etc.? The first level to the downside on the SPY is 453. Below 453 is 451, 450 area, then 448. And right now, this momentum is not bullish. Okay? And just keeping in mind also, when we had that MACD touch at these highs here, this is the 310.16 MACD. So that's why it looks a bit faster. The 310.16 MACD. So remember, when we touch this high, it leads to a bit of a pullback over the course of at least a month. So that's why we got into puts for 2 months out. And that should be good. So I'm still holding these puts. And I really do think that we should get a bit of a pullback sometime. Not necessarily soon. But overall, the first 2 weeks of December should be flat or bearish. We usually get a bounce into the end of the year and early January. But for now, this is immediately what we're looking at right now is not a bullish setup. At most, what's going to end up happening is we're going to have support at 450, right? Then we basically have to see what the market does at 450. So if we're above 456.50 and we can hold and close back above here, then we can start being a bit bullish. But, if bears can bring this below 452 and close below 452, then, we should get a continued move to the downside. But overall, right now, guys, this is a bearish setup. Like, this is not bullish. This is not really what you want to see. We had a big move to the upside. A wick followed the next day. That failed, and then we gapped up, failed at the same highs, and we ended up closing at the lows into the close. So what could end up happening is we could gap up a bit, 0.3% overnight, something like that. And then from there, we could bounce a bit higher, 0.4, 0.5%, and then end up falling lower. So we're going to have to see. a lot can happen overnight. But, you know, overall right now, this is, in my opinion, this is not a bullish setup. The momentum is leaning bearish now in the short term. But once again, holding any puts in the short term is very, very risky because the overall momentum has been bullish. So that's why anything that you want to lean short has to be with a lot of time on the expiration date. All right. So, yeah, you know, all eyes on the yields. And once again, if you guys want access to the Discord, the proof is in the pudding. Definitely join. And, you know, this is not a lie. This is not a gimmick. You guys have been watching me for years now. And things are working out really, really well. People are making a lot of money. And they're doing very, very well. And it is what it is. So if you guys want access to it, definitely click the link in the channel description or in the comments. Go to the how to join. And yeah. Boom. You just follow the steps and should be good to go. All right. So I hope you guys have a wonderful rest of your day. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.